If you've ever second-guessed your pricing or worried you might be undercharging, you are not alone. Pricing is one of the hardest decisions we have to make in our business, but it's also one of the most important. And I'll tell you, there is one pricing mistake that I see happening over and over and over again, specifically with service-based businesses. So today we're going to talk about how to actually price your services and how to make sure that you are charging a sustainable price that also can pay you. Hi everyone, I'm Jamie Trull, CPA and Profit Strategist, and here on this channel, I love to bring you everything you need to stay informed, organized, and profitable, the most important one, in your business finances. So please make sure to like and subscribe. So first, let's talk about what most people base their prices on. Now, when I talk to small business owners, there are common themes around how they typically come up with their pricing. So let me know if any of these feel familiar. Maybe you're pricing based on what your competitors charge, or maybe you are thinking about what your customers will reasonably pay or what they can afford. Or maybe you're setting your pricing based on what feels safe to you, what feels like a price you can charge that people won't scoff at and that you won't feel tremendous pressure to sell at. But here's the problem with these being the primary methodology for coming up with your prices. They aren't rooted in your specific business's numbers and what you need to charge to run a profitable, sustainable business. I'm not saying that none of this is important. Obviously, it's important to have an eye on what your customers are charging, and it's important to know what your customers will reasonably pay for something. But that shouldn't be the only way that you're coming up with your prices. And that's why I say pricing is a formula, not a feeling. This is not an area that we want to be guessing about. This is one of the most important decisions in your business and often can be make or break between a thriving business that can grow and scale and one that's not going to make it very long. So let's talk about what you might be doing and what I recommend you do instead. Now, speaking specifically about service-based businesses, one of the issues that I see a lot that will prevent you from being able to really scale and will lead to burnout is when you are charging an hourly rate, even if that is a high hourly rate. And here's the reason. An hourly rate will always have a ceiling to it. There is only so much work that you can do. And if you're charging hourly, it's going to be really difficult for you to feel like you can actually take a vacation. This is especially true if you are the main person doing the service work in your business. Charging this way means your income is capped based on how much you can work, and it means you have entered the dreaded trading dollars for hours cycle. But my friends, the unfortunate truth when you do that is that you've really just created a job for yourself. It's really difficult to build a business off of a model like that. So let's talk about how I actually recommend you come up with your prices instead. Instead of just picking a number and letting your emotions and feelings get in the way, I want you to understand two things: your cost and your value. So let's break that down a little further. When we are determining the minimum price we need to charge for a service, we need to understand the true cost of what is going into producing that service. Now, this is fairly easy to determine. If, let's say, you have a staff that's serving clients, then of course the cost to be able to provide that service is the cost that you're paying your staff. Time spent by your staff that is actually serving the end client and providing the thing that they are paying for is what's considered a direct cost. Now, you likely have additional costs above and beyond those direct costs. So if you have administrative help or you're using software for all your different clients, those are things that we consider typically to be indirect costs. And those are important too, but they're not as important when you're thinking about pricing. And that's because direct costs are the ones that are directly related to the service that you are providing. So we need to understand that first and foremost when you're calculating your prices. Now, this conversation around direct costs and indirect costs might seem familiar to you, especially if you've read my book, Hidden Profit. And within Hidden Profit, I have a chapter fully dedicated to pricing. It is one of the 8 different profit levers that you can use to increase your profit and pay yourself more money. So if you haven't gotten Hidden Profit yet, definitely check it out wherever you buy your books. I'm going to give you a bit of an overview here in this video, but the book goes into more details and calculations that will help you apply it to your specific situation. Plus, like I said, there are 7 other profit levers that we're not even going to talk about here in this video, so the book will help you walk through all of that. Now, I'm a fan of formulas, so I'm going to put up the formula that I have for determining your minimum price to charge that I include within this book. So my recommendation for calculating the minimum, and we'll get back to why it's just the minimum price to charge in a minute, but my recommendation is to take your total direct costs, again, those costs that are directly related to the service you're providing, and divide it by 1 minus your target gross profit margin, and that's going to get you to your minimum price to charge. And when I say minimum, this means that you will be sustainable and you will have enough money to be able to run your business and pay yourself. And this is a price that you can charge that will allow your business to be scalable and able to grow. Now, if you're wondering what gross margin percentage you should be targeting, the answer is it depends. But the key here to remember again is that gross profit margin is that profit margin that only includes those direct costs. So we're going to ignore all the overhead and everything, at least for now. Now, this is easier in, let's say, a product-based business where maybe you're buying something wholesale and then selling it retail. So of course, the direct cost related to that sale is the price that you paid for those wholesale materials. But of course, in a service-based business, it gets a little bit fuzzier. Now, for most businesses, I generally recommend a gross profit margin percentage between about 40 and 60%. Now, where on that spectrum you fall is going to depend on a few things. For example, I recommend that if you have a lot of fixed costs or overhead costs that you need to pay in your business, that you aim for the higher end of the range. However, if maybe it's just you as a solo service provider and you work from home, maybe 40% will work for you. So I like numbers. We're going to walk through a little bit of an example here to show you what I mean. Let's say that you own a hair salon, and in that hair salon, you have multiple different stylists. Now, let's say you're trying to decide how much you should charge for a men's haircut. You determine that a typical men's haircut takes about 1 hour of a stylist's time. And let's say you're paying your stylist $20 an hour. Again, I'm just picking round numbers because it makes this an easier example. Now, let's say because you own a brick and mortar business and you have rent and utilities to pay, you decide to target a 60% gross profit margin percentage. And let's say that in addition to the $20 an hour you're paying to your employee for this, each appointment also uses up about $2 worth of supplies. We're talking shampoo, conditioner, hair color, whatever is used. So that means your total direct cost for one haircut is $22. So let's plug all that information into this formula. Our direct costs are now $22. Our gross profit margin is now 60%, which then calculates out to be a minimum price to charge of $55. Now, why do I say that this is the minimum price to charge? Well, that's because so far we've only looked at cost and we haven't thought about value. What is the value of the service that we provide to the customer that we serve? Now, I know that can be really difficult to discern at times. That one's not quite as straightforward as coming up with the cost. But let's say in this specific example, maybe you actually run a fairly high-end salon. And people come here because they feel like they get pampered. They get hot towels, they get snacks, they feel taken care of. Well, in that instance, you're providing more value than just a haircut. Or maybe you are providing just a haircut, but you have one of the best stylists out there that people want to come to. In those cases, that $55 that we calculated should be the floor of how much you can charge. If you can bring in a steady stream of clients and charge a higher price, all the better. The key is we just don't want to go below that floor. And that floor is also really important to know if we're going to be giving discounts. So let's say you decide to charge $65 as your normal price, but then you allow for a $10 discount for returning customers. In that case, that still keeps you over your $55 minimum price to charge. So that gets an A stamp of approval from me. The thing we don't want to do is just always charge that minimum price, and it gives us no wiggle room in order to be able to offer additional incentives. So while I recommend knowing your minimum price to charge, I do recommend increasing it as you can justify in the value that you provide. Now, if you're in the situation where you calculate out your minimum price to charge and you feel like the value is actually lesser than that, then we've got an issue. We're in a place where you may not have a sustainable business. So what do? Do you just give up and walk away? No. There are two things that you can do. You can either reduce your direct costs, make it cheaper to provide the service. That might be looking at materials you use or maybe how efficient your processes are, or you can increase the value of what you provide. How can you make what you're doing more valuable to the customers that you're serving? Or in some cases, it may just be that the customer needs to understand the value of what you're providing. And that's where good marketing and messaging can come in. Now, you might be wondering, what do you do if it's only you, a solo service-based entrepreneur? How do you know what your direct costs are? And this, my friend, is the $1,000 question. You remember when I said earlier in this video that there's one mistake I see all the time in pricing? This is it. Often, solo service providers don't actually understand the true cost of the service they provide. And that's because to them, there doesn't seem to be a monetary cost. The cost is really their time. But if you've been around here long enough, you know time is money. But how do we figure out how much money it is? Well, my recommendation when you're doing this pricing analysis and you are a solo service-based entrepreneur is that you consider what it would cost to hire someone else to provide the service you're providing. Now, I'm not talking about what it would cost for another you. You are the owner of your business. You're probably doing multiple different things. What I'm talking about is specifically the cost to hire someone to serve the customer. Going back to this example we were just using, let's say you actually have a salon suite. You don't have any stylists working under you. It's just you. How are you supposed to come up with what your direct costs are to be able to use in this calculation? Well, you might have guessed it, but it's exactly how we did it previously. You're going to determine what it would cost you to bring someone in to do that work on your behalf. Now, this is important to do regardless of whether you would actually go out and hire someone or not. The key is that if you are charging as if someone else is doing the work, that means that you will actually be able to scale your business if you so choose, and bring in other people to do that work and still have money to pay yourself. The mistake that so many service providers make is that they charge what they would expect to be paid if they worked at a job. But if you do that, you will never be able to hire anyone to come work for you because there will be no money left over to pay you. And that's why, even when it's just you, it's important that you follow the pricing formula. If you do that, it will be much easier to hire help down the line if you so choose. And that, my friend, is what makes a scalable business. The goal is not just to charge more for the sake of it. The goal is to charge prices that are actually sustainable and allow you to stay in business and pay yourself well into the future. And hopefully to take a vacation every once in a while. Now, if you're watching this saying, that's all great, Jamie, but I have no real idea what my actual costs are. Well, that might be more about financial organization. Maybe it's time for a new system of tracking your finances to make sure you have access to the data whenever you need it. And that's why I made a quiz to help you decide what system is best for you. And this might be a little controversial, but maybe it's time to kick QuickBooks to the curb. You can check out that 2-minute quiz at jamietrull.com/accounting quiz or using the QR code on your screen. Thanks for joining me. If you want to know more about finding hidden profit in your business, well, as it turns out, I got a book for that. So make sure to check that out wherever books are sold and go grab your bonuses at jamietrull.com/book. Thanks for joining me. I'll see you next time.